Yeah, we made it again. We made it to another Whip It Out Wednesday. Right here, the Solomon Project, where it's not how much you make, it's how much you keep that counts. I'm your host, Richard Burr. Gotta be careful out here. You gotta be extremely careful, because there are flies everywhere. Oh, man. But it ain't the flies you gotta worry about. You see, I brought it up before. Just want to remind you, the communities that were most successful, our communities that were most successful, have those three pillars. Three pillars that make up that solid foundation that they have. And remember, these communities didn't implode. Remember that. They didn't collapse from within. They were attacked from the outside. Viciously. Out of jealousy and just pure hatred. But those three columns are very important. And those three columns, and in those three columns, and part of those three columns, there is no individual. It's based on relationships. It's not individualism. God, family, and business. These are relationships. No one person achieves by themselves. You'll find plenty of people that are just that ungrateful that they don't think about how they got from point A to point B. In their arrogance, in their selfishness, they claim they did it by themselves. And that's the farthest thing from the truth. And it's not done, or rather, maybe the individuals believe that. Maybe these transactional individuals, right? I speak about the transactional individuals all the time. Transactional individuals tend to be ungrateful. They tend to believe that they make it all by themselves. And they won't hesitate to stab you in the back, to sell their own mother, just to get the power and the money. That's a transactional individual. You have to be extremely careful with those people. They're very shrewd. They're extremely manipulative. They could sell ice to an Eskimo. That's how good they are. So you got to be extremely careful with these transactional individuals. They'll say whatever is necessary. They will kiss your butt. But when they're done, they're going to walk away with everything you own, or just about everything you own, or enough of what you own along with somebody else's to give them that leverage and not give a damn and step all over you in their pursuit for more money and more power. It's a transactional individual. They'll tell you that you're the most beautiful thing they've ever seen. They will do things outside of what they would normally do, provided that there's something better for them at the end. and only for that purpose. So please be careful, because they're out there. And remember, God, family, business. Family. Family is a relationship, not just blood. It's a relationship. Me being a family member to my brothers, my sisters, my children, my parents, aunts, uncles, grandparents, grandkids, I focus on one thing. I focus on making decisions so that I don't have to serve as an obstacle to all my family members. When I make a decision, I make sure that I don't fall in such a hole that I have to stop whatever my brother, whatever my sister, whatever my son, whatever my parents are doing to come get me out of a mess. I'm a grown-ass man. And when I make a decision, I should always keep my family in mind, as well as my friends, as well as my business partners. I should always keep them in mind. I shouldn't put them in a situation where they have to stop what they're doing, stop their flow, stop their progress because I'm irresponsible, because I'm selfish and want to have fun all the time at any given cost. Let's go over what CJ is going through right now. CJ's account took a hit. CJ's account took a hit. Because CJ is not a professional, and even professionals make this mistake, but even because AJ hasn't been exposed to the stock market all that long, he sees this hit, and we're going to put it up here in a second. He sees this hit, and he has an emotional reaction. An emotional reaction is okay. And I know that I'm always telling you guys, you have to separate your emotions from your decision-making process. That doesn't mean that you don't become emotional from what you're witnessing. It just means that you have to be careful. You have to be careful. When it's time to make a decision, that's when you need to detach from your emotions. So let's put up CJ's account at the position tab, and we're going to see. Do you remember where it was last? It was somewhere around the 1860s, 1870s. It's now down to 1664, as you can see here. That's a fairly big drop. For the amount that the account is worth, that's a pretty big percentage. Was CJ disappointed? Yes, he was. He was hoping to be above 2,000 by now. So now he goes to a former professional to consult and find out to see what to do. Who is that former professional? Richard Burns. Yeah, so he goes to Richard Burns and he says, listen, Richard, look at my account. Look how far it went down. In fact, let me show you year to date by going to the gains and loss tab. Okay, let's go there. So we're down 20%. Mr. Burns. We're down $412. We should have been at 2,000 by now, Mr. Burns. So what do I tell him? This is the reality of long-term investing. There are going to be moments where you look at your account and you may get disappointed. But you need to understand, CJ. CJ, don't sleep on me, man. Wake up. I'm talking to you. Accounts don't go up all the time. And they don't go up in a straight line. They go up and they go down. So if when it goes down, you're feeling this way, when it does the opposite and goes up, don't get caught up in your emotions. This is how an account naturally moves. This is a natural progression when you have a long-term investing strategy. 5 years, 10 years, 50 years out, you're going to see this. You're going to see ups, you're going to see downs. Now, where you would really be concerned and you really want to poke into your account and take a closer look at specific stocks that you have, is when every time it goes down, every time your account goes down in value, does it continue going down further the next time it goes down? In other words, if it starts here, then it goes up, then it goes back down, but it goes lower than it was, and you see a pattern like that, it keeps going down. Every time it hits a down, it goes further down and further down and further down. Then you need to go into your portfolio and start analyzing things. But for now, there is one particular stock in his portfolio that's really creating this fear for him. And that's the last one on the bottom. If you look at it, he's got an average payment, an average buy price, an average cost of $19.31. The current price is $7.74 below the average price that he pays. And that's where he's receiving the biggest hit. Now, CJ's still nervous about it. So I told him, okay, let's go into that one stock and figure out what's going on. By the way, if you remember on previous videos, the average cost was just a little higher than what it is now. And every week since Whip It Out Wednesday has been here on the Solomon Project, the average cost that he's purchased it at has been going down further. And this is very interesting. I'm going to show you what CJ did, because CJ has the same stock, but he's not at a loss the way AJ is. Why is that? Timing. We'll get into that. So I suggested to CJ, come, let's check into this company. Let's see what's going on. This particular company is selling off subsidiaries that it owns. It's selling off subsidiaries that it owns because these subsidiaries are not performing well. So now, shareholders are holding back. Some shareholders are selling off. Maybe they don't understand what's going on. Maybe they're just afraid. However, looking into the percent of institutional investors, it's still relatively high. So the institutional investors, they didn't abandon this company. They might have sold off some shares in order to balance out the risk assessment for their investors with regards to this company, but they're not selling it off. They're not getting rid of it. Should the next earnings report demonstrate that the company has hit rock bottom in terms of how much it's been losing or hasn't been performing well, you're going to start seeing the institutional investors coming in again. And what that means is that that gap that CJ has from the average price that he paid for and the current price now, that gap's going to close. And it can turn green. So because CJ has been dollar cost averaging this one specific stock for so long, he now has 68 shares. And I don't know if you remember when he was down in the 20s or 30s with these shares. He's now up to 68 shares. So that's closing that gap at 100 shares. Remember, we're trying to reach 100 shares for each one. And CJ also has 73 shares for the third one from the top. So the bottom one, the lower priced stock has made it possible for CJ to continue buying at a discount price. CJ is not worried anymore. He's no longer scared. He understands what's going on now because he teamed up with his mentor, Richard Burns, and Richard Burns explained exactly what was going on with the company. So now he's good. So what's he gonna do? Exactly what he did already. He already purchased 2 more shares, actually 3 more, because with the $35 he was able to buy 3 shares instead of 2 this time. Discount price. Now let's check into the income, because you know that the income is very important. Why? Because all the shares that CJ has in his account are all dividend yielding shares. Let's put up a reminder of how much he's supposed to have by the end of this year, 2024, December 31st, 2024. Let's see how much he's supposed to have. $129, right? $129. He's supposed to have $129 by the end of the year. You saw how much it was last time. Here it is. He's at 120. Mid-year, he's at 120. Mid-year at 120. He only needs $9 to go. Remember, if we're calculating it as an increase of $1 per week, we should have it in 9 weeks. There are 26 weeks left in the year. Maybe 26 weeks left, which means that he's got 16 extra weeks at $1 a week. So we should see it go $16 above 159, or it might be more. Why? Because we keep purchasing shares. Ain't that right, CJ? It's quiet right now. That's the most important thing. So now we got CJ settled. We calmed him down now. He's not worried. He understands that these things happen every now and then. And because of the type of company that is, he really doesn't have to worry. Now let's check on CJ. So CJ if we use the same analogy I always use, which is the elevator with the cables, each cable representing one company or one stock of a company. CJ's cable is now, or CJ's elevator is now composed of 3 cables. What does that mean? Why do I bring that up? Well, imagine being in an elevator on the 48th floor, and your elevator only has 1 cable, and that cable snaps. See you later. It's the same thing when you invest. If you put all your eggs in one basket, or if you got an elevator with just 1 cable, which represents just 1 stock that you're investing in, and that stock goes bad and it goes under, you can say bye-bye to your money. But CJ has moved on. He's approaching things a little differently because he is focusing on one particular stock, getting it to 100 before he moves on to the next one. So now he's got 3 cables. 2 of those cables has 100 shares each, and the other one is already building up. I think it's got 7 or 8 shares. We're going to check right now. But for now, look, he's at 1,457. He's right at CJ's heels. Right at CJ's heels. And he's had this particular account for a much shorter period of time than CJ. Right now, year to date, from the time he opened the account, he's down $71. Year to date, he's down $53. But he's not concerned. He's not concerned. Now, if we look over to his positions, you can see he's got 100 shares of one, 100 shares of the other, and 7 shares of the one that had CJ concerned. Now, why is CJ and AJ communicate with one another? Why is CJ purchasing the same shares that has CJ worried? Well, CJ did the homework. CJ knows what that company is about. CJ is good with what's happening. And CJ is aware that this is the best time for him to come in. As a result of him coming in, now he's not suffering the same type of loss that CJ is. And this is an example where timing can be very important. However, CJ and AJ are both long-term investors. And although CJ came in at a better time, he's not going to be purchasing shares waiting for there to be a better time every time, because CJ is also dollar cost averaging. And he ain't worrying about it. He's stacking right now. He's stacking. He's going to get to probably maybe 10 different companies, and then he's going to start deploying option strategies. CJ is going to be employing option strategies, but he's going to be waiting for himself to get to the $2,000 mark in value. So they both conquered their fears. Well, actually, CJ conquered his fears because AJ conquered his fear because CJ came in unafraid, didn't care, said, Richard Burns told me to do this, and I respect him. I'm not his fanboy, but I trust him, I respect him, and I'm just following through. That's it. This ain't no fanboy move. Because the second I see something's going haywire, the second I see that Richard Burns is in another planet, bugging out, saying something that don't make no sense to me, I'm out. I'm out. But what Richard Burns has told me, he said that his strategy and his approach is akin to what Warren Buffett does. I know who Warren Buffett is, says CJ. So if it's something similar to that, okay, I can rock with him. But like I said, I ain't no fanboy. The minute I see something twisted, going crazy, I'm out. And with that, I'm going to give it up to Kitty, because we're out too. Hold on, let me see where Kitty is, because Kitty does whatever the hell Kitty wants to do. Sometimes, gotta get on Kitty's butt. Yo, Kitty, what? Kitty, come on, man, we gotta bounce. Let's go.
Arabamda aça, seviyorum çift kalem aça. Göremedi kimseden fayda, işler